My name's Dan Marcus. It says NYU on my ID here, or on my name tag. I went there for school. I got a sports business degree, but now I teach there in the sports business program. But by trade and my training, I'm an attorney. I represent a lot of clients in sports, including family offices, or including one that's rolling up, player agencies. Before that, I was a founder in the sports tech space, primarily in the ticketing space. So this is something I know a little bit about. And then actually, fun fact, Chad's co-founder in 76 Capital helped me develop and sell Pete Rose's gambling podcast, which is a fun claim to fame that many of you have heard me say before. And we can talk about that offline. But that's me. I'll start to my left and go to my right here and let everyone introduce themselves. So Chad, why don't you kick it off?
Sure. Chad Stender, a partner at 76 Capital. We're focused on the early stage side, how technology is disrupting gaming, betting, media, and entertainment. We're out of Philadelphia. Going on our 25th year next year. We're coming across and moving into our third fund in this strategy, 4 exits over the last 2 years. And I want to be thankful. We have our portfolio company, Lucre Sports, here. They're out of New York in the peer-to-peer gaming space. And I always appreciate their support. So thanks for having us.
Thanks for the plug right off the bat. Justin.
All right. Good afternoon, everyone. Justin Papadakis, USL. So we operate professional collegiate and youth properties right now in the soccer space. And so we're a franchise system, but operate, like any other professional soccer league. We, in addition or simultaneously, we also do a lot in real estate. So our strategy is largely around leveraging, one of the superpowers of sports with a stadium and creating stadium anchored entertainment districts. And so we have several $1 billion of active projects going on right now. Several. So 2, and then 2 coming in the next 6 months. So.
Okay. Hi, I'm Rupert Lazlo. I'm the founder of a company called Another Level Holdings. We're a sports investment fund where we're investing in athletes for a piece of their future earnings.
All right. Good. Yeah, move closer so we can see it now.
Perfect. Yeah, I'm sorry. Be closer to me. Yeah.
I can sit on his knee if you like, but that's another conversation. So we invest in athletes with piece of their future earnings and help build an infrastructure around them to take them where they need to go, to build a legacy for them for once they retire.
Awesome. And Marty, we don't have Jed on Zoom.
I don't have him on Zoom now.
Okay. All right. No worries. Then we're going to do a 3 or 4. So if anyone's paying attention to the headlines, you've seen a lot of big headlines, especially around sports franchise valuations. And that's where we'll start, but we won't end there. And you've seen owners like Mark Cuban, Mark Lazlo, all getting out. So my question for the group here, and I think I'll start with you, Chad, and then we'll sort of mix the order up, is are we closer to the top than the bottom? And are we in the midst of a bubble as it relates to sports franchise valuations?
Sure. This wasn't set up, and I spoke to Lazlo's head of sports investment yesterday. So the timing was apropos. They are tripling down on the valuations of teams and the opportunities across the leagues and the media. The way they're looking at it, and a lot of others are, on your big 4 to 5 leagues, it's kind of servicing the debt as like the real opportunity, and that there's a ceiling on some of those team values, kind of 1.5 to maybe 3x at best, NFL, NBA. I think the real opportunity is the challenger leagues and women's sports in totality is where, if you're looking for that 5 to 10x across a 10-year time frame, that's the opportunity. Cuban himself, 2 years, talked about getting into betting, and that was a big focus. And I think he saw the partnership with Adelson. So I don't think he's getting at it at all. I think it's a separate opportunity for him. But now is the time to be across the asset class of sports and entertainment. And some of the brightest minds across Wall Street are there. And when you look around at who's owning the teams and the media rights, and that's where a lot of the power and the control is.
And Lazlo, real quick, he was the owner of the.
He was one of the owners of the Bucks.
Yep.
Yeah.
He sold that.
He did very well.
Yeah, very well.
And then people thought he was crazy when he bought them for $400 million. And there's turned out there was a crazier guy named Steve Ballmer who bought the Clippers for a couple billion.
Yeah, I think we're seeing the same thing. I think the Big 5 and extended out to Premier League and some other leagues around the world have done a fantastic job, and I think will continue to do a fantastic job in the future. The USL, we are taking a view, and I think We are, compared to those leagues, younger in our maturity and definitely younger in terms of our revenue potential. And so, for example, next year we're adding professional women's soccer. So, within a year, our teams will, more than double their revenue, just, by adding the women's team in. And we believe that you'll start to see, as sports property mature, from your national partnerships, your media, sports betting, you have this, really strong kind of hockey stick dynamic where you're not national until you are national. Your media rights aren't worth a lot until they're worth a lot. And so I think we're, in that, we're in the next couple of years, we'll be moving into that phase where soccer is an established sport. Our stadiums are getting bigger. So our organic revenues, will be moving up at a lot faster percentage rate than the more established brands, which hopefully for us translates into, continued runway on our valuations.
So I have a lot more USL follow-ups, and so you get all your plugs in. And Rupert, I'll get that back to you, but this is actually a good opportunity. I see a hand. I just want to use it. Hold on one second. I just want to use this as a PSA to let you know, this is the last one of the day. Let's make this interactive.
Absolutely. Here you go. So number one, you have 5 sports leagues, right? What's the common factor? Billionaires. Okay. The wealth effect in this country and around the globe has meant the money for a lot of billionaires. Number 2, scarcity value. How many Jerry Jacobs are out there? How many Ballmans are out there? There's very few.
I don't know. I'm not familiar with Jerry Jacobs, but Jerry Jones.
The guy from Dallas, okay? Jerry, whatever his name is. Dallas. The guy who's just so tired.
Tom and Jerry, we got it.
All right, so think about it. So you got big money coming in. You've got billionaires playing these major sports. You got media rights going through the roof. Take a look what Sohani sold, $700 million based on Guggenheim valuation on it. Number 3, you got basically the combination of merchandise and media rights. You've got an aging population that's interested in sports, and a young population also interested in sports that way. And then you got the idea that basically when you put your name on it, how much should actually Ballmer put up? He's maybe a 10% owner, but there's a whole bunch of other LPs in that. They go with Boston Celtics, they go with any of the major teams. So you got the wealth effect of one guy going in and buying it from out and then syndicating the risk. Isn't that right?
Yes. I'll say for us, I think that dynamic is something that we're seeing a lot of, where the big 5 now are almost exclusively, now multi-billionaires.
Yeah.
And so for the challenger, brands, we are more accessible. So for, a small percent, our teams are 25 to 80 million. So, someone can come in, if you look at their alternative asset allocation and their sports within their alternatives, for 1 million to 5 million, there's a lot more people, numbers wise in that, bandwidth than, in the multi-billion bandwidth. And
that's
so
what's driving the process.
That's who's driving. And I think, added on to that is, those people, a lot of them also, they like the sector, they want exposure to it, but they also really see the transformational kind of economic impact that sports can bring to their community.
Sure.
So when you combine that and then, or, add in the women's side, that's where people, I think, are seeing runway, but also community impact.
But the key part that's left out is private equity wasn't allowed to invest into teams until about 3.5 years ago. And that's every league except for the NFL to date. The NFL just increased their borrowing limit. And I think the NFL is getting there pretty quickly. And that's across the men's side. And the women's side on the NWSL, 6th Street just took majority ownership of one of the teams. So I think the moment private equity is now here, and also there's money outside of the States, there's Saudi money that went into Monumental, right? And so
it's global.
It's global. And so, but that's a very key piece.
Absolutely.
To the valuation. Yeah.
Absolutely. The other thing is that, we talk about women's sports. I don't know about you guys, but the 2 Johns, i.e. the billionaire sons between Soros and Patrikov running Athletes Unlimited, is a horseshit business model.
Was that a question?
No, it's just not. It's an actual observation. I know that.
So I think like your point, just to respond to it, then I want to give Rupert his due here. I think there's vintages and there's eras and generations of sports team owners. So Jerry Jones actually might not have been your greatest example there, because Jerry Jones I think bought the Cowboys for maybe an 8-figure sum in the early 90s, late 80s. And he made his money off oil. He was not a billionaire.
Yeah.
He became a billionaire because of the
Same
appreciation
with Kraft.
of
Same with Kraft.
that asset, Kraft, the
Go down the whole list.
the Steinbrenner family. So what you're seeing right now,
Generational change.
the generational change, but you're also seeing, from a family office perspective, you're basically seeing these assets have generated family office wealth, but they're all tied up in the team, right? These aren't necessarily cash flow businesses per se on a year in, year out basis. Like the Yankees, for example, the Yankees are not a hand over fist cash flow business, even though, the $15 beer might suggest otherwise.
Right.
So what
You make money on the media rights. You don't make
what
money
you're
on
seeing,
merch or food.
now is an opportunity for these institutional players to give liquidity to the families and next generations of these team owners, and thereby creating that opportunity for them. But Rupert, I'll give you an opportunity to address this.
No, thanks, because from my standpoint, look, everyone's been talking about team valuations, going through the roof, like you said, Saudi, the PIF coming in, Mubadala with Man City, etc. Huge amount of money, crazy valuations. On top of that, you've got the media rights as well. But no one is really, there's a trickle down effect onto the players. Player salaries are going through the roof, but no one has really been looking at that as an investable asset class. That's something which, in another lifetime, I tried to be a tennis player. Unfortunately, rare occasion I got a check, it was never had enough zeros on it. So I kind of got out of that space. But I see a huge opportunity to be investing in the athletes.
What are the athletes' handlers doing? The agents and the.
To me, a
brokers
couple of
behind
people,
the
and again, I don't wish to, offend anyone in the room, but, two groups of, and I'm generalizing here that I don't really like, are agents and private bankers.
Yeah, well, those guys are the ones that follow the posse that is behind some of the second and third tier NBA, NFL, and all these other players that usually wind up signing a big contract out of the league in 4 years and destitute 5 years later.
Absolutely, and that's something which we're totally
Period.
coming in to disrupt and try to create a legacy for these guys. But to me, I see huge opportunity in the athlete standpoint, because also it's not like if you're investing in teams and that kind of thing where, your capital can be locked up for a very long period of time. If you're investing in athletes, you can be getting capital back year 1, year 2, year 3. So it's quite a, a
What do you
liquid
mean,
asset.
I don't know what you mean. What do you mean investing in the asset?
So,
That you teed them up. Go for it.
well, for example, and I
I mean,
appreciate
just
that.
to make sure that they're healthy and stuff,
No,
or
okay,
are you
so
giving
no.
an advance on their
No,
thing?
so hypothetically, again, using data, we're scouring the universe of athletes. We'll find one, let's say a 5-star athlete, he's a quarterback, about to go to, Alabama, something like that. His freshman year there, we'll go and sign and give him hypothetically $1 million for 10% of his future earnings. For example, my US team here, they look after Jamar Chase, who some of you might know is a wide receiver for the Bengals.
Yeah,
Freshman
very
year,
good.
Jamar said, Rupert, I would have taken $1 million for 10%. His first contract 3 years later was $50 million. Now using data, we're going to help him become the highest paid wide receiver in the league. Next contract will be $150 million plus.
Wow.
So it can be quite interesting.
So you're getting kids out of high school, is what you're telling us.
We're getting kids high school moving into college. Yeah, we'll be investing in athletes age 16.
It's kind of the NIL treatment also, right?
We've got a whole NIL site, team around them as well. Yeah.
But why early stage investing though? You get the early stage company, then you hope they grow to be a Google or something else, right?
Yes, but this isn't so much of a VC model where you're going up, signing 100 kids and hoping 3 or 4 make it.
Right.
This is not like how you've heard in some private equity models where it's like, yeah, if we just hit singles and doubles, we're going to be fine.
Okay.
Screw that. Every single athlete we're looking to find, we're looking for him to be a home run, because the infrastructure that we're putting around them, no one else on the planet will have this kind of infrastructure with Hall of Fame athletes, mentors, advisors, trainers, because you've never worked with the best of the best guy, you don't know what it takes to get there. So if you've got training like with LeBron or Ronaldo and his trainers and that kind of thing, you can understand that from a young age. To me, great things can happen.
So
That's
you
This question on that.
Right.
So you provide capital, liquidity to the athlete up front. I'm assuming the agent gets his part of the bid.
No,
Okay, no, it does not. You put him in a program that would accelerate his growth and his earnings. And are you hedging against that by some type of insurance policy if the kid blows out his knee, what have you? You have risk mitigation.
again, in case he gets injured, for example, absolutely we will be doing that. But again, we're not, let's just take the model of $1 million of 10% of his future earnings. It's not like $1 million, here you go, off you go, because maybe the kid goes to Vegas for the weekend. He invites me, that's okay. But basically what we're going to be doing is out of that $1 million, half of that, he's got to lock up in a fund for the next 10 years. So whether he makes it or he doesn't make it, he's going to have some capital there, to help him for the afterlife as well. 25% of it, he spends on himself, on his team. LeBron spends $1 to $1.5 million a year on himself. Okay, there's a reason why LeBron is LeBron, and the final 25%, fine, he can go shopping.
Is that 10% if they become coaches, You also get 10% of that future earnings as well?
I also want to know that the hands are been largely ceremonial, but like if you give me a hot second to direct traffic, like this woman over here, it would be fantastic. No, respectful.
You know, I think that it's a little more complicated what you're saying. I watched the movie Air, and he had like, the main character was
Michael Jordan.
this guy who was.
Michael Jordan, no.
Yeah, not Michael Jordan, talk about the.
Yeah, I
the
wouldn't.
guy who was watching 24/7 the baseball games from high school athletes, and he pinpointed Michael Jordan. So that guy was doing that for like 40 years. He was still like trying to find the right athlete to put the money behind it. So it looks like you're doing like angel investor, just putting a little bit in to see who is going to survive. Because if you really want to pinpoint on Michael Jordan, it has to be a guy like that only does that. I know it's a movie, but the movie's a really.
No, the movie's a fabrication. I work directly with David Falk, who's Michael Jordan's agent, who's depicted in that. The movie's a fabrication. Some stuff is correct. I wouldn't use movies as predicates to be able to, inform an investing strategy as a preference, but I'll let Rupert respond to that because he's the one that's actually in the business of doing this kind of thing.
I mean, so again, in another lifetime after I got out of tennis, I still work with athletes. IMG used to send me the top kids in tennis to go look after. People like Jordan, LeBron, Messi, these are outliers. And yes, we want to be finding them, absolutely. And I really hate to simplify this, but it's not rocket science to become a world-class athlete. People talk about, let's talk about tennis, Roger Federer, how much talent he has with shot making skills and so on. But people don't realize hard work is a talent. So the difference between Ronaldo and Messi, Ronaldo outworked everybody. But again, I've seen so many examples where the kids they think they're working hard, but if their trainer has never worked with truly world-class athletes, like the best, they're just selling themselves short. So I've been fortunate that I've been around that. So that, every single guy we have, for example, our sprint mobility coach, Lance Borman, he's probably worked with more Olympic gold medalists than anyone else on the sprint side of things. Right now he's working with Noah Lyles, fastest man in the world, just won 100, 200 meters. So every single one of our guys has got that kind of background. So purely from outworking in the right direction, you can create a huge amount of upside and value from these guys.
So you got more of a platform, right? So there's a value add to what you bring for that.
Huge amount of
10%
value
that
add.
they- Right. You might be moving them into that circle where they can make more money.
He might
Plus
be
analytics on how performance and how much they get paid.
the fastest man in the world, but he's actually never seen me try and catch the 4 train at rush hour. I'm the best man in the world.
we might have to put him on the payroll.
One other unique thing about soccer, which all these aspects, being becoming a great athlete's more than what you do on the field, and actually more importantly, we do off the field. And I think soccer has this unique incentive structure to make athletes, top performers, because unlike in baseball, basketball, football, hockey, where you trade players, in soccer, you sell players. So same with those sports, you want to develop those athletes so they win on the field, and winning translates into, some financial success. In soccer, you buy and sell players for millions, sometimes hundreds of millions of dollars. And so like our teams and teams around the world have this really kind of added incentive structure where we can invest into those players holistically and then turn around, and now we're selling players for millions of dollars. And so you have that additional major revenue stream, and most importantly, incentive to treat and develop these players properly.
So I do want to pick up on that. I saw another hand.
I want to just ask about the colleges, okay? Because these are pre-college, your college is recruiting them, and now the dynamic has totally changed because the athletes can be compensated. How does all of what you do, how has it changed? Because
Can I come back to you and let Chad speak to this? Because I know, at the VC level, you guys look at things like NIL and looking at who's actually systematizing this, who's commercializing it. So I'll let you address that one first.
The most recent legislation by Baker is to try and catch up for the disservice that's been done. It's a matter of time before the Power Four now, because it's not the 5 anymore. Men's basketball and probably women's basketball will be privatized. And it's going to be this arrangement between the universities and the capital. And then the collegiate athlete can go back to being a collegiate athlete. Now, the fact that UCLA is traveling to the East Coast to play a field hockey game, a soccer game, the economics aren't there. So our belief at 76 Capital is privatizing parts of the college process across sports. And we're a big believer in relegation, where if you're a smaller school but have the ideas of playing in this power conference in college sports, you can play up. And if you're not performing, you can move out of it. So the European model, and you guys have this as well. That's kind of our latest take. It's going to take a lot of time. The media deals have to play through. But right now, the NFL is on a $20 billion annual revenue. They're probably going to get to 25. That's Goodell's goal. College football is about 5 to 6 billion. Not 1-to-1, but there's a lot of room for growth. And you're seeing it. And yes, it's the media deals. A lot of the value is sports betting and media, and they're connected. But there's room for growth.
As a fan of perpetually bad teams like the New York Jets, I'm not a big fan of relegation because my teams would always be relegated, but I do see the value in it.
Maybe they should. Maybe they should be. Maybe they'll play better.
Name any New York team, and we'll all be Philadelphia fans.
I don't know, Phil. I don't know, Phil. But anyway.
So a quick question, in soccer, in Europe, they pay a transfer, what's the term they use?
Transfer fee.
Transfer, and the transfer fee, the revenue doesn't follow, the money doesn't follow the player, it goes back to the team who sold them?
So depends on the structure. Sometimes the
Tell me about the
player,
structure.
sometimes the player can get a piece of that.
Right.
But typically, outside of like your really large, really
Ronaldo,
high profile
Messi,
players, the money would go from team to team.
You see a big example of that this summer with Mbappe moving from Paris Saint-Germain probably to Real Madrid. He's going to get because now he's coming to be a free agent. He's going to get a huge
Yeah,
contract.
so there's no free agency in that, I mean, it's very little free agency, you have to tie top things, we're saying.
Very little, yeah, but
Not like
you
you.
can get a big.
I just have to jump in here and say that Justin has a model that's multivariate, lots of different sources and influences. So I at some point, hopefully you can dig in a little bit deeper on what he's doing. So
Yeah, so I think that is an example of, our teams and teams around the world. Now we're seeing like the next major kind of gold rush for soccer talent is the United States. We obviously have the athletes, arguably the best professional athletes in the world. We just haven't developed them right for soccer. So I don't know if, you have kids that play soccer, but if you look back, even 5, but definitely 10 years ago, you had all these youth soccer clubs that were organized around having more kids pay to play. And so not outcome based. And so now what's happening is the best players are all rolling up under the professional team in the market, whether they be MLS or USL. And now you have more outcome based development. Again, now they have an incentive to think holistic about those players. And so now our teams, selling them for millions of dollars. Every player is an asset, not an expense like like other sports are.
So Justin, for the uninitiated, can you explain the USL and all the different divisions and where it sits relative to MLS and some of the other soccer that people have heard of?
Yeah, so what we really saw an opportunity is to break out of the major minor construct, like you have here in the United States, but you don't have in the rest of the world, where we play the MLS, for example, which that doesn't happen in minor league baseball or hockey. And they have bigger budgets, so they win 65% of the time. But we're very, very competitive. But what we did see as an opportunity is, they're going to be in 32 markets that we can use that power of professional sports and be in, other markets that they're not in, or be in different parts of the market that they are in. So between the real estate, the players as tradable assets. And then looking kind of at the enterprise model of outside, whether it's training facilities, ancillary real estate, you have this, really interesting platform that you can add women's soccer, you can add lacrosse, other rectangular field sports, and then own from professional all the way down to youth. So what you're really investing in is owning a sport in your market, which, that's where we see the long-term
mergers.
assets.
This sounds like I'm a basketball guy, the old ABA and NBA that eventually merged years later with Dr. Julius Erving and so on. Do you ever see a merger in the future based on that model?
But the basketball didn't change, Ken. I mean, it's not yellow and white anymore.
Yeah, exactly.
We want the MLS to do really well. We want the NWSL to do really well because we think there's room for all three of us. Just as a comparison, in Europe, roughly the equivalent population and land mass there's like 35 Division I leagues. There's 100 something total professional leagues. And so,
Basketball leagues, in Europe, right?
yeah, so
Seniors are playing pro.
I think the better that they do, the more the MLS valuations go up, or NWSL, that creates more space for us. Again, we go and develop stadiums over 1 to 8 years, and then we package them up, and then we sell them to our what will be our team owners. And so we have a very real estate driven approach because we think for long-term value, you have to own your stadiums. You can't be a renter. And so that's, been our strategy, which is, slightly different than the other leagues.
So there's lots of risk mitigation around their strategy. So this real estate, there's a lot of building and opportunity zones.
Yep. So I think sports again have, that gravitational pull. So we can go to, B or C real estate. And by putting a stadium there and an entertainment district, you can turn it from a B to C to a B or an A. And so then sports has, the combination of your traditional asset class of real estate plus the asset appreciation nature of sports, which is, very conducive to opportunity zones.
And I'm not sure how many people have been to Dallas, but anybody who knows the Dallas Cowboys practice facility in Frisco, that changed the whole economic model of Frisco, right? And so a lot of other cities look at that as being, wow, if we built a stadium like that and gave away some of the property rights to investors, then there's a lot of value with that.
Didn't the PGA also move to Frisco?
There you go. But I think that's probably influenced by the Cowboys having this amazing 10,000 seat indoor facility.
No, I think the
right?
PGA is still in Palm Beach,
Still in
Florida.
Palm Beach.
Yeah.
Is it in Ponte Vedra?
Yeah.
US chamber, but CJ.
There's someone who
PGA of
moved
America
to.
is moving to Frisco.
Yeah, because my son looked for a job there, so.
Oh, the PGA of America, those are your local golf pros. So, yeah,
Okay.
that's different than.
Yeah, I know it's
Isn't it
Frisco.
locally, even Harrison? Where they built the soccer stadium and then what they're building around Harrison.
I think we can solve this problem with a quick Google search, but I just want to get back on track. Very quickly. So without, John, go ahead, John.
One question, maybe I'm showing my age, but can you invest in a sports franchise and also a gaming company? Or is that,
Gaming, are you talking about wagering?
yeah,
Okay, this is a really good question for Chad, so I think.
Is there a conflict?
yeah.
Depends on the league, the state, and the ownership amount. For the most part, no. Michael Rubin was a part owner of the Sixers and just divested so he could become, they could launch Fanatics Gaming. It's kind of your big example. It's going to be interesting to see how Cuban plays this. For the most part, no, but it kind of depends on the league, the state, and the amount of ownership.
Okay.
And creative legal structure.
Yeah, I think that's the creative legal structure is when you can own the sports book, or you do a deal where you lease the sports book for X million a year in guaranteed payments. So you don't technically own the sports book. You just, are taking out a lot of the profits via rent payment. So there's different, structures you can have.
By the way,
But every owner will say they were first in DraftKings or FanDuel. So
yeah,
Could you walk through the scenario by which, let's use an example, because I have a friend of mine that's an owner in a female basketball team. So how would female basketball enter into an agreement with your specific team? Or do you have to start at the league level and work your way down?
Yeah, so it's a great question. So what we've done over the past 10 years is I think we're the only league to have a real estate department. So we are working in 50 markets right now to structure the stadium deals. And then we'll get the land assembled and title zoned, et cetera. We'll put it together, and then we'll go out and work with potential investors who want to buy into that.
By the teams? or
Into the teams,
concept? Okay.
into the teams. Yep. So the fun part about investing in a team isn't, 8 to 10 years of entitlements. I'm sure we have a lot of real estate people in here who, that is fun, but for most people, entitlements and working with our city, county, and state partners, is kind of the not fun part about owning a team. And so we try to cut that out by working on that at the league level on the front end, which is very different than, the other leagues.
So let's take John's segue and talk about wagering just a little bit, and Rupert, I'll give this to you and see where it fits into your mix here. I'm gonna come back to you. I promise you I'll come back.
Okay.
So since 2018, at least in the United States, sports wagering has been legal, and everyone's figuring out. It's been a buzzword, really. Like, I mean, Chad, you guys were first movers in this. Like, wagering has become a buzzword, NIL has become a buzzword. But the question is, like, how do people in this room make money off it? So for you, Rupert, where does this fit into your mix in terms of your model, or just in general from the macro standpoint?
I mean, I guess there's two completely different sides of it. One is we got a phenomenal in-house data team that work with, they advise a lot of the gaming companies over there, on odds and how to look at different viewpoints in games and so on, which the gaming companies wouldn't normally be looking at. So we're deciding whether or not we really want to be building that out properly. But then on the other half of things, there's been a huge thing in the UK where a lot of the Premiership teams, for example, have got shirts sponsored by a gaming company, and some of the issues that's come from that. There's one player who I'm sure most of you guys won't know, called Paul Merson, used to play for England and Arsenal. He just came out with a documentary about he had a chronic gambling problem, how it cost him big in his career, his marriage, and everything else. So this is a big issue for athletes as well. So separately, we're going to be helping, advise them against that. But there is obviously, it's such a huge market that there is a lot of opportunity in that space. But that's not something which I think directly is the direction that we're going to be going in.
I mean, I'll hop in here. It's been our core at 76. It's been our strength. It's also fortunately been a lot of our exits to set the table. 5.5 years ago, the U.S. federally said every state can decide their betting and gaming laws. And we at the time said we expect to see over 30 states across 10 years, and it to be in the hundreds of billions of dollars of annual. Fast forward 5.5 years, you have 38 states, DC, Puerto Rico, Canada just had their version of PASPA, parts of South America are now. And the way we looked at it is, if this addressable regulated market is going to grow exponentially, so it's been 220 billion bet in a regulated market across the last 5 years, half of that has been bet in the last 12 months. And so we said, if this is going to grow exponentially, we want to move across and own the data, the analytics piece of this, the media side of it. And two big components for us has been integrity and compliance. So thinking through almost the SEC, not the conference, but the regulatory body. Two of our companies actually just merged, which is, if you're in this room, that's an opportunity that we can take offline. But it's been really successful for us. Like I said, we've had multiple exits in the space, one to DraftKings, another one to Fubo TV. And I foresee there's going to be a lot more M&A, but you also have some really big players. So ESPN finally made their decision, and they just moved in the last 3 months. Fanatics that I mentioned earlier, they have 90 million plus customers. They're in the sports betting space. And then I don't know how many people, but Bet365, the largest betting outfit, they're privately held. They're starting to have a big place here. So it's going to be more than your FanDuel, DraftKings, MGM. But there's a lot of upside, and we think there's a lot of investable areas that are not, the way we look at it is we do not try to pick the sports book.
This might be a bad room for this, but I'm going to take a quick poll. How many people in this room have used a sports book on your phone, or made a bet, a legal bet using a sports book on your phone, either New York, New Jersey, wherever you live? Pete, I know you're lying to me. I know you're lying to me. Your wife's not watching, I promise. But this is a segue, because for those that have used it, for me, I feel like it's a commoditized product, right? Like, all the prices are the same, the experiences vary a little bit. So with the DraftKings, the FanDuels of the world, how much room is there for sports books? Like, how many sports books can actually stand on their own 2 feet between ESPN getting in the game, FanDuel, DraftKings, et cetera? I'll direct this to you, and then trust me, I got a question for you.
Our take is there's going to be 3 to 5 big winners, but it's probably going to be closer to 3. To Dan's point, historically, because the betting entities had to move so quickly and get licensed in each state, and there's not unlimited licenses. So you have to get the license. And so they've just been trying to stand up, and they've been white labeling a lot of legacy technology, just putting lipstick on everything. DraftKings has their own tech platform. And that was another investment that we had that we sold, was a next gen. But I think you will see differentiated pricing, risk mitigation, and strategy. But right now there's about, and Mike, you can kind of correct, there's about 5 global leaders that set the lines, and they're not all on the regulated sports side, but basically 5 books globally move the lines, the -7s, the over-unders, and then everyone moves off of that. And so it screams for the need for innovation and technology. Nevada, Vegas specifically, never had it because they never needed it. Sports betting was always an afterthought. It was about getting people into the casino. Nevada's online gaming is a reverse ATM. You have to walk into the casino, put your money in, and then it uploads to your phone, right? But everywhere else, it works smoothly, which is another opportunity. You get your credit card information in, you get your social in, and then you can move off your phone if that state's in mobile.
It's too easy.
Yes and no, in the
For
sense
the
of.
guy that's never done it.
Truth be told, I haven't. You know why? Because I have two boys, 27, 23, good kids. They dabbled in it.
Yep.
And I said, house always wins. They both voluntarily got off it. You know, they wrote in and they don't do it. But we love sports, but it's too easy. It's like you can lose your house. You
Sure.
can go through that, like just by sitting at your phone.
Yeah.
And that's what, quite frankly, it scares me and we love sports.
You know, I mean, the two companies I mentioned, US Integrity and Adjunct Compliance, we have a prohibited better list now.
Yep.
Using technology to keep people from betting.
Right.
This comes up all the time.
Can I add myself to that list?
Yeah, I just,
You're down.
you know,
Yeah.
look, everyone has their outlets, their vices, and so you need to be doing it responsibly, no doubt.
So, okay, Justin, coming back to you from the perspective of a league, especially one like the USL, where does wagering fit into the mix? Like, what is your perspective on it? Is it a good thing? Is it a bad thing for a league like the USL with all these different divisions?
Yeah, so from like a revenue perspective, 4 years ago, from our worldwide, sale of our audiovisual rights, we made zero, and now, the next couple of weeks we're signing an 8-figure deal. So significant kind of fast ramp up. I think for our teams, 4 years ago it was zero, of course, because most of it was illegal. And for the states, obviously that you have sports betting being legal, I think it'll be our team's number one category, like it is for Europe outside of the big, or in the Premier League outside of the big 5 or 8, because they have different dynamics because they're such a world product. And then I think for fans, I think it'll be particularly helpful for teams like USL because of the gamification aspect. So just like, in video games, you can buy things for 50 cents or $1. I think, who's gonna have the next throw in, 50 cents. It's gonna be kind of almost like Tinder for sports betting like that, rather than, I think in the past, it's been very, if you go to a sports book and you see all the odds, I think that's very intimidating. And I think that has really narrowed it to, hardcore bettors. I think now this gamification is going to really open it up to people who just want to engage with the game more. And, you are betting, but it's more, game interaction rather than, the traditional style.
The one stat that I always love to talk about is of the top 100 viewed programs last year, all of 94 were sports, 87 were football, 82 were NFL, right? So it is the last bastion of live entertainment, and that's why you're seeing the dollars flooding there, and this will only continue.
Just out of curiosity.
Sorry, you're the moderator, sorry.
I mean, I thought so, but it's kind of out the window. Marty, I saw your hand first. Go ahead.
No, Howard, I yield my time.
I thank the gentleman from the other side of the table. So you spoke about the top 100 shows that were viewed for audience. How much has gaming changed actual viewing of the NFL, for instance? Because, like, for instance, my son-in-law is involved with all these different leagues, and he probably gambles also, besides, just whatever, fantasy football. But he only watches Red Zone. And I wonder how much of those top 100 shows are actually Red Zone.
Well, no, they're the game itself, right? So the answer is, but
So it's the game content.
what I kind of remind everyone is sports betting, gambling, people have been doing it since the dawn of time. Before Passball, it was ballpark to be about 150 billion unregulated industry, which is, I always say, it's like how much crack is sold on the street. You don't know. What betting I think does is drive the viewership all the way through. If you're riding certain players and props and over, but it's driving the media rights deal. So the NFL is coming off a $110 billion deal. They have an annual $100 million data deal that's separate from their media deal. And the NBA is coming up, and it's probably going to be about a $75 billion deal. The NFL next year is looking to play more games globally than they have previously. But to your question, I think people have all different views, whether it's a fantasy team that they're going for, whether it's their home team, or whether it's on and out socially.
For the record, I did not have on my bingo card for today how much crack is sold on the street as a question. So like, I'm glad.
No one
we're
has the
there.
answer, do you?
Yeah. If I had the answer, I couldn't put it on tape. Mario, go ahead.
Yeah, so I guess one of the things to do what Justin's doing, you really have to be the low cost provider. And I went to go visit one of Justin's video centers where they have actually made a lot of innovation on broadcasting. Besides the fact that they have this, the base load of the video that they can push out to any advertiser in a very targeted way. You want to talk a little about how you operationally you're probably a little bit more superior to other people who are doing sports broadcasting. And he said you guys have innovated a lot.
Yeah, so what we try to do, because, at this point, we don't have the billions of dollars of TV deals, is try to really, is try to how to cost engineer. So historically, you had to roll a satellite truck up to every game, and that's $20,000 to $200,000, depending on the level of production. And so with 1,000 games, we've been able to centralize that into our studios down in Fort Lauderdale, which Marty came to. So we have those same satellite trucks, but they're inside in a warehouse and they're lined up in a row. So we can, we brought the cost from 20 to 40 down to 10,000.
So they have like a satellite truck in a box that sits in the stadium at all times.
Yeah.
And they can use it for video. And then also they have the ability to outsource the video to freelance videographers. Right.
Yeah, so you have to get it from the stadium to the studio, insert the graphics and everything, and then out to the local TV, to ESPN or CBS, depending on the league, and then around the world into sports books, all within 2 seconds. And so that's, a lot of technology to be able to implement that. And so that's what we try to have, that technology, because you need, if you're past 3-4 seconds, you can't really do prop bets. And so how to get that within a manageable cost for our teams.
The one thing I would say
Is there
too,
another question, Mary?
All right, so to understand with your package, besides the media rights, assuming you have a piece of where you see out the advertising, the sports betting, the whole, what is your package include? So I said, when you interact with like a league or a team, what are you bringing to the table for them, and how does that? So trying to get my head around the transaction, how it would work on a localized level.
I would think of our teams as an NFL or NBA team, right? So the teams operate the same way. The teams do get, they get to keep all of their local linear rights. So almost all of our teams have local CBS, Fox deals, so they keep all of that. And we have a shared on the ESPN Plus or Paramount Plus. We have a shared inventory allocation between league and teams and broadcast partner.
Okay. So you own all the media rights and everything.
Yeah. So we sell them nationally and internationally, and then the teams sell locally, but the teams share in the national and international media deals.
Understand. One last question. I'll yield my time to the gentleman down the table.
Thank you.
So what is the demographic for your team? Obviously not, a high school, not a high school team, but is it a low-end college team? Is it a professional female team? What is, what's the barrier? Actually, what's the level of entry of the perfect team or client or situation that you would engage with?
So our teams are fully professional.
Okay.
So
No college or?
No college. So they're on 12-month contracts. They're full professional athletes. And so soccer does skew a little bit younger. Now they're really on the men's side. We'll get there on the women's side in probably about 5 years, but you can't really go to college and be a top level soccer player now. So you go pro at 17, 18, and you can go to school online, but you turn pro at that age now.
Is there another women's soccer league?
There is. So it's the NWSL. And, you know, again, right now, they've been around for about 10 plus years. And so, but there's only 200 women's professional playing spots in the United States. And there's, I think, like 40,000 women college players. And so we're going to 5X that over the next 5 years. And so we're seeing very strong interest from our city, county, and state partners. You know, when we show them the graphs about how much they've invested in men-only facilities and how much which is billions, you know, sometimes 4, 5, 6, 7, and women's, most of the time it's zero. And so that's not great.
I can imagine a lot of these women bring their NIL rights along with them and their popularity.
So we have a question down here.
Sure, two points. Number one about the women. The reason I mentioned Athletes Unlimited is when I asked Jonathan Soros a question, how much do you pay a typical volleyball player professionally? Because it went from 22 to 36. He said, oh, for a 5-week season, $20,000. I dropped the goddamn mic. Are you kidding me? That's not professional. That's just nonsense. But aside from the editorial comment, let's ask the elephant in the room here. Saudification of sports. You got Norway, it's got a wealth fund, you got Saudis. What's happening? Could you guys opine on the sports world from the point of view of where the players going, live, PGA, where those kinds of things are happening? Give me a second.
This is a great question to address to Rupert, because Rupert's kind of, I don't want to put words in your mouth, but you're kind of banking on them driving the price up and driving salaries up.
I mean, look, I've been going to the Middle East for over 30 years. So I know some of the boys there quite well. I remember the David Rubenstein interview with Yasser Wamayan, who's head of the PIF. And David said to him, so, you know, the first, $1 trillion fund. Yasser says, 2 trillion, David. Oh, wow. So the capital they've got, they just set up a new fund called Surge, SRJ, and they're going to be putting over $20 billion into soccer alone. You can see what they're doing with Newcastle. And then they've got links with, like we also had the deal with Clear Lake Capital, when they bought Chelsea. So, Clear Lake have got phenomenal relationships with the Saudi guys. So they've been buying a lot of players, selling them onto there. So there's a huge opportunity with, from the Middle East to be going, and they're all competing with each other. So Abu Dhabi competes with Qatar, that competes with, with Saudi. And it's a little bit like when you go to a nightclub, who's going to end up, ordering the most bottles of champagne. So a lot of that as well going on in the region.
That is basically Middle East going after European franchises.
Going after Europe.
None of them have been coming to the States. I assume there's a reason.
That's not necessarily true at all.
Yeah.
Because let's take one step back. Let's not talk about franchise, even though LIV is technically a franchise sport.
Yeah.
Okay.
LIV is actually the prime example for you.
Okay.
Because LIV, we're talking basically about an American entity where they've basically been unconstrained by market
Right.
forces.
That's
it's not an economic model that makes sense that they're
It does.
like
That's
when you're
correct.
paying
I stand
Phil
corrected.
Mickelson, who's 50 plus years
I
old,
stand corrected.
and as a character is like $400 million, whatever, 250, whatever they paid him.
Yeah.
It doesn't make any sense. So who it's good for are people like Rupert, who are banking on the next Bryson DeChambeau, the next John Rahm to get this kind of payday. How long it'll last, I have no idea.
But they're not gonna.
Everything the academies do, but virtually, right?
No,
I mean,
it won't be virtual.
No, I'm just saying, like, you can be dynamic in the way you allocate people to different.
You don't have like a physical.
No. So we'll have physical structure as well. We've also got relationships with groups like Exos who train athletes professionally. They've got venues all over the US and so
Well,
on.
but my point is that you're not gonna get Saudi money coming in and buying an American franchise like Cowboys.
I'm saying they already are.
Cowboys
They
are on.
already did it. It's already happened.
Where?
It's happening. Monumental. It's already happened.
Who's been buying what franchise?
Saudis bought into Monumental.
What's one?
Monumental owns, they're not taking it under Monumental's Ted Leonsis, and they own the Capitals, Washington Capitals.
Ted Leonsis.
Yeah, and they also
But behind.
they
He
also
took out
Washington-
an existing owner. They took out an existing.
They're an LP owner of Monumental. Yes.
Okay.
They bought in.
But
But if you're asking, if the
what was
question is it sport washing? Like if that's the general question, I think it is.
I think,
no
Yeah,
question,
no,
no
for sure.
question.
for sure.
That they will come in and bid up any of these franchises.
Well, it
They
depends on-
are, they have, I think the answer is they have, they will likely continue to do so. But what Chad's point is that the rationale is not economic. The
Yeah, insurance is not an issue.
rationale is PR.
Right.
Yeah,
So it's a sports washing, as they call it.
exactly, yes.
Isn't that what Joe
Maybe-
Tsai did with the
Maybe there
Brooklyn
was a
Nets?
period in
Joe
2000.
Tsai?
Joe, to my knowledge, Joe Tsai has never funded
Wasn't
like
he-
any terrorist, activities.
No, wasn't he at, wasn't he from Alibaba? Wasn't he one in China, the Chinese?
Yeah, but he's not sport washing. Well, actually, I think he got, like, he's from Jersey. Like he went to school in Jersey.
There was a period in like 2012, 2013, where all the sovereign wealth funds were buying up all the buildings, like the biggest building in Chicago, the biggest building here. So are we in this era of the sovereign wealth funds buying up franchises now rather
But
than
that was for different
trophy
reasons.
franchise rather than trophy
I mean, yes,
buildings?
they wanted trophies, at the same time, they're also looking at it from a financial perspective. Here, they're not looking at it from a financial perspective. This is purely, as you were saying, purely sports wise.
Yeah, I wouldn't say franchises. I would say leagues, right? So they're starting leagues, and I think the next move. And I work closely with a group that advises PIF on all their sports activity. The next sport to pay attention to is tennis.
Tennis.
And who's behind tennis? Is it single individuals? In other words, my question here, Monumental may be one example, but the idea of buying NFL, NBA, and all those other sports, that was the first one, versus the LIV being the golf players, the individual tennis players, the individual golf players, individual sports. That may be something a little bit different. I'm not sure. I'm not that well educated about it, but that's what you seem to be saying. Tennis and golf are a little different, easier for those guys to do than coming in saying, hey, we want to buy the Dallas Cowboys.
It's easier for them to compete because those models are. And I don't want to dominate this because we got a group of three other smart people that are much smarter than me. But it's easier for them to compete because those sports are broken. The PGA, while a good product, was not a good model with respect to players. And Rupert knows this from an ATP standpoint or from a tennis standpoint because it's really freaking hard to make a living as a tennis player or as an individual athlete.
Absolutely.
So they've seen an opportunity to compete, less so sports washing. They saw we can make a bigger impact with our dollars here than we can make a bigger impact in buying the New York Jets, which actually, frankly, I would hope that they do because
So it's about the Saudis again. So the way soccer works, you know that, right? So not in the United States, but in Europe, so they go to South America and they get all those kids like Messi, well, you keep watching. And then in South America, you have those guys who watch the kids walking and just playing, in yards. They don't play in schools, they play everywhere, right? So they spot those kids, they go to the little clubs there, and then they buy the kids from the clubs, and then they bring to Europe, and then they build up, and then, after like 5 years, they become these incredible Now, because they have all these incredible soccer players, the teams have a lot of value, then you buy the teams, and that's when you make the big real money buying and selling the team. But now, what Saudi Arabia is doing, they're buying the soccer players so they can build the teams there and then have a real, game structure. That's why they get Cristiano Ronaldo, and they got Neymar, even though Messi came to the US. But I think that's what, that's the question. Is that what I think that Beckham is trying to do with his team? Like he's bringing Neymar, not Neymar, Messi, and
Suarez.
so he builds a team that has a value, because when you look at the team in the US, regarding like, say soccer, but like football, say all over the world, the teams don't have value, right? So how are you going to build the value in the teams? Like the Saudis are going to build incredible teams, buying all those incredible players. And maybe they're going to start buying the players in the local countries too, when they're like 12 years old, do the same thing that France does and the UK does. So how can you compete with that here?
Well, there's a lot there, but I think from our strategy has been to, when you can be star driven or story driven. And so we like the story driven model, which, we go and we like sports because our teams do have value, because we have infrastructure assets that are very difficult, even if you're the Saudis, to come build 40 stadiums all at once. Very challenging, because it's not a question of money. You have political dynamics and everything. So that we like having the train tracks there. When your sport is dominated by star-driven leagues, and particularly if they're individuals, that's much more susceptible, and especially tour-driven sports, because you don't need billion-dollar stadiums, right? Like you just grab a person and you can go. There's a lot of golf courses to play on, right? And so those sports are much more susceptible to that type of kind of hijacking, so to speak.
I don't know if
because-
that's the word you wanted to use. Or...
Yeah.
But, yeah, I don't know if that's the best word.
5 minutes.
Yeah,
Sure.
so, but I think you'll see more of that, so that's why tennis, women's tennis, with the WTA, I think is gonna have some decisions to make over the next couple months of how much, they either go with, they try to fight against it, but when you, as an athlete, you're being offered a lot more money to play in a, different tour. That's something you have to compete against. But our strategy, I think, is very different because you don't have to go rely on star-driven talent, which star-driven leagues do work if you have all the stars. And so, but there are more dynamics there. I think to your point about the players playing in the streets and stuff,
Like a team player, tennis is different because individual stuff. Like I talk about the reason that Barcelona is worth so much, and Chelsea and all those, and that's why they buy those teams for so much money because they have a lot of good players and they keep feeding with more and more players.
Those are iconic. Those are iconic teams that have been around for a while. The people that are Barcelona.
I'm sorry, but I know soccer.
That's what that
all those things.
That's fine, but I think
Paris Saint-Germain, Barcelona.
I think you would be.
Chelsea, United. So all those teams are huge teams. They all work a lot of.
They have the
and
stars,
that's
but
why-
it's the
that's
media.
why
It's the
Barcelona
media
is
and
right?
the ticket.
I mean, I think you
sales
Yeah,
and
that's
driving
why
sales.
those teams
Okay,
are
sure.
billions
All
of
So
dollars.
I have one question for everybody, which is a trivia question. Does anyone here know what the most popular soccer league in the United States is? And I'm sorry, it's not you guys yet. Do you know the most popular soccer league in the United States is?
Not MLS.
It's not MLS. What is it?
Chelsea.
No, it's not. It's actually Liga MX, which is the Mexican soccer league. So a non-American soccer league is the most popular soccer league in the United States. And I only raise this to say that there's a huge latent market here for, I guess, amongst Hispanics and Latinos, especially for soccer. And I think that's where that opportunity comes in. And so I want to tee up my last question by asking this. We've talked about franchises. We've talked about wagering. We've talked about NIL. We've talked about all the buzzwordy stuff. Where are some of the latent markets? Where are some of the, I guess, lesser known opportunities in the realms of sports and sports adjacent that you think are worthwhile? And I'll start with you, Chad.
I'm going to answer the question. The one thing that we didn't address that's key to this conversation is about 5 years ago, the largest global tech players weren't focused on sports. Fast forward today, they all are. So Apple has the rights to the MLS, $2.5 billion deal. Amazon's gotten in on Thursday Night Football, Google on Sunday Night Ticket, Microsoft bought. So if you talk gaming, Microsoft went out, Activision Blizzard, $70 billion. So the big thing, and we probably should address this earlier, we can take it to the restaurant, is what are your leading companies globally doing? They're focused on sports. I think the biggest opportunities across women's sports are none. And I think if you want to make multiples on your money, starting there.
So you think they're in on the next NBA media rights? You think they're in on the
I
next
think-
NBA media rights in
I
a
think-
year or two?
The WNBA, I think, should have separated from the start. I think it was a disservice to the league getting grouped in with the men. The NBA, big time.
Grismalo's got a question, last question, 30 seconds to answer.
It's not a question, just a statement. So my son is an intern at UConn, sports and conditioning coach. Every team has got its own facility. The amount of money thrown at these teams is amazing. UConn.
So can I let these guys answer the question I asked and then we wrap it up that way?
Yes.
Cool. You remember the question?
Yeah, I think putting my real estate hat on, I think the biggest opportunity is going to be in sports entertainment districts from a real estate asset class. I think retail is going to struggle, office is going to struggle, but sports has the superpower of getting typically free land, with significant city, county, state incentives. And so we come into the real estate game with a 15 to 20% economic advantage, in addition to the value appreciation of the underlying sports team. So I think when you combine those together, I think that's going to be the biggest opportunity.
Last but not least, Rupert.
Thanks. It was interesting. Last week I was having breakfast with the head of sport at Goldman in London, and he was giving himself an introduction. We were talking about the world of sports and where he thought the best opportunities were. And without me saying anything about our model, you're saying everyone is looking at the teams and that kind of thing, the media rights, but, huge opportunity in the players, and investing in these athletes. And I think, exactly as to what Chad was saying early on, for me, I see women's soccer as a huge opportunity to be getting involved with, because I think that's going to be taking off in a really big way. So, that's an area which, I think that, okay, for an investable dollar size, it's hard to put a lot of money to work, but I still think that, you can have some pretty interesting returns there.
All right, well, thank you. I think that's it for time.